Today I made about $4,000 10 minutes into the open trading live in front of all my members. I love recording videos like this because I know how much it can benefit people. In my opinion, trade breakdowns are some of the best ways to get actual knowledge from YouTube. Now, I'm always giving breakdowns of my personal trades to my community, but sometimes I will also do it for free on YouTube. Today's one of them times, so I hope you enjoy, and let's get right into the breakdown. So taking a look at my screen, this right here is exactly the trade that we caught. I bought it at 21,464 and I wrote it to 21,386. That was a 2.1 R position, and let's go over exactly what I saw and why I took it. So it all starts on the 12-hour time frame. Now, if you watched my last video, I went over exactly how I use short-term liquidity over a daily bias and basically gave you all the knowledge you need in order to have a proper daily bias for free on YouTube. So I highly recommend that you go watch that video out if you haven't already, and especially if you are struggling with getting the direction on point. But we opened up today and we were delivering off of this 12-hour BPR, okay? Now, a BPR is also called a balanced price range. And what that basically means is we have a bullish imbalance here and we have a bearish imbalance here. And when those two overlap, we call that a balanced price range. And you can look at it kind of like a stronger fair value gap. So I was expecting some sort of reaction from this BPR on the 12-hour time frame. And if you know anything about the market from an ICT point of view, you know that it is attracted or hunts two specific things. It either wants to accumulate stop losses, also known as liquidity, or fill in inefficiencies, okay? So we had a 12-hour imbalance right here, all right? Now, if you wonder why I draw my imbalances like this, for example, right here, I'm not drawing it from wick to wick. I am also including the volume imbalance that we have here, okay? Because that's the correct way to do it. So if you have an imbalance that also has a volume imbalance, well, then you need to include that in your fair value gap, okay? So small volume imbalance right here, and that was my target for this trade and my first objective for today. So going back here to a 2-minute time frame, I'm typically trading anywhere between the 1-minute and 5-minute time frame, okay? So we're zoomed in here to a 2-minute time frame. And the first thing that we pay attention to, which I just showed you, is obviously the 12-hour gap delivery, okay? That was the BPR that I just showed you on the 12-hour time frame. And when I say delivery, I mean price is coming from a higher time frame imbalance, which in this case is a BPR. Now, down here, we have the 12-hour unmitigated imbalance. And that was the target that I used for this very trade, which I just showed you on the 12-hour time frame. So coming into today, we sold off with the New York Open here at 9:30. And I told my team members that I would cancel the trade if we ended up sweeping this low. Reason being, the NASDAQ was much further ahead of the S&P 500, meaning if the NASDAQ ended up sweeping this low, it would cause a bullish SMT. And I don't want to short a market that has such an obvious bullish SMT. So I wanted to see that low stay open. And if I play it out here, you can see that we came very close to the low, but actually just ended up making equal lows, which is even better. So I told everybody that I was going to short the optimal trade entry of this range right here because we had a bunch of liquidity at this low, and we also had this 12-hour unmitigated imbalance that you see right here. Now, my stop loss went to the high, but it went to this high for a very specific reason. Something I preach is that you must have a very, very valid reason for your stop loss and a very, very valid reason for your entry and take profit, okay? I see a lot of people that has a valid entry, but really not any reasoning behind their take profit or their stop loss. In my opinion, that is gambling, okay? You need to have a well-rounded plan that includes your stop loss and your take profit. So the reason why I placed my stop at this high is because the NASDAQ was much further ahead of the S&P 500 down here, which means the S&P 500 was way closer to the highs than the NASDAQ. If I were to get stopped out at this high, that would mean that we would invalidate a bearish SMT, okay? There would be an SMT at this high because the S&P 500 would sweep the high much before the NASDAQ would. And if I am short within a market, I'm bearish, and we start violating bearish SMTs, well, then I'm probably wrong about the order flow. And in my opinion, those are the best places you can place your stop loss. Because if I got stopped out on this, I would know that, okay, I got the order flow wrong. That's on me. I'll take this loss. So by having an actual reason for my stop right there, If this were to fail, I know that it's because my analysis was wrong. There's nothing worse than getting stopped out, but finding out that your analysis was completely right and you simply got stopped out because you didn't have a plan for your stop loss. Now, my take profit obviously went here to the 12-hour imbalance, but I actually took a partial at a 1-to-1. Okay, this is something I will very often do on both my day trading accounts and my swing trading accounts. I will take my first partial at a 1-to-1, and I will also go break even on my position at a 1-to-1. Now, not only was this a 1-to-1, but it was also the optimal trade entry, drawing it from the low to the most recent swing high, which is a point in price where there's very likely going to be a reversal if I got the order flow wrong, right? So even though I have a set rule of putting my stops to break even at a 1-to-1, I want to make sure that my 1-to-1 is also in an area where price might reverse. That is the most important part when it comes to partials and break even. You want to do it in an area where price might go against you. And in this case, that was the optimal trade entry. So again, we got the fill right here once price reached the 0.618. And as you can see, it just barely tapped this 2-minute imbalance here as well. And if we play it out on the very next candle, I was break even on this position. I had taken my first partial and I let the rest run to this 12-hour unmitigated imbalance that you see right there. And all in all, this was an absolute perfect trade, and I called it out as being an A+ setup. The reason why this is an A+ setup is because I have a strong reason for my stop loss. I have a very strong reason for my entry and my take profit. So all in all, a very planned trade, okay? If this trade had hit my stop loss, I would have no problem with taking a loss like this because it was so well planned. Those are the trades that I want to be involved in, okay? These are A+ setups, and this is what you want to be sticking to. You want to make sure that every time you put on a play, you have a plan for everything. I mean, partials, break evens, stop losses, take profit, everything must be planned before you put on the position, okay? If you're not planning your trades ahead of time, meaning you're planning them and knowing exactly what you need to do before you get in the trade, that is, in my opinion, considered gambling. You must plan it out before you get into the trade. This will also make it way easier mentally to handle losses because you understand that, okay, if it hits my stop loss here, it is a part of the plan and there's a reason for it. So if you're struggling with your mental game when it comes to trading, well, then you're probably not planning your trades the way you should be planning them. So that right there was exactly how I made about $4,000, and it took 17 minutes from market open. So this was a very fast day, which we obviously like. Now, not every day is going to look like this, okay? This was simply an example of an A+ trade that I wanted to share with you guys because I believe that you could learn a lot from this analysis. So thank you a lot for watching, and I'll see you in my next video.